The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the week on Friday, we found some good money flow in the grain and oilseed complex ahead of a 3-day weekend. No markets on Monday for President's Day. A lot of headline risk that could be seen, I think, in this trade as well that we'll have to keep an eye on as we get into the week ahead. But again, an overall positive end on Friday. Livestock a little more mixed, some things we could talk about there as well. Let's dive in. Joining us for a conversation. It's good to have him back with us on Market Talk. Ted Seifert from Zaner Ag Hedge is joining us. Hi, Ted. Good to see you, buddy. How are you?
I'm doing great, man. How are you?
I'm good. Nice to be back in the studio.
Yeah.
A lot of travel in the last 2 weeks. San Antonio, Louisville. I mean, kind of making the rounds. It's good to be back in the studio and home. And hey, a nice gift for producers, I'd say, on Friday with a decent rally in that grain market. It just a lot going on. There's a lot to digest, I think, in this overall market picture right now, Ted.
Yeah, and actually, Wednesday, Thursday, Friday was all pretty good for corn, right? I mean, we keep running up against that $5 mark in the March corn, and you've got, May, July trading well above $5. So yeah, it's nice. It's really nice. Like you said, there's a lot going on in these markets. Obviously, South American weather is something we watch very closely this time of year, and we've had things to talk about with that. But then, I think Friday was, like you said, money flow, and kind of headline driven, another attack on the Port of Odessa, Russian drone attack on the Port of Odessa, which really sparked wheat and corn followed. And although soybeans don't have a whole lot of skin in that game, soybeans were the ones that had the most technical room to run, I think, off of a pretty a bounce off of a very significant level of support. The problem that I have with all that, though, Jesse, is that, we've been trading Russia and Ukraine for a really long time. And, it's been a little while since we've had a big rally based on a port strike, something like that, or a vessel strike. But in the past, these have been fairly short-lived things, right? And Ukraine always finds a way to continue to get exports out. And I also feel like there is a much better chance now, or in this current time frame, of getting some sort of resolution between Russia and Ukraine than there has been in the past 3 years. So, it's good to see the strength. And I think wheat has, first of all, I'm very interested in the wheat chart. There's when I'm looking at charts, and I'm just talking commodities wide or even equities or whatever we're looking at. Sometimes I just look at charts as I'm looking for some speculative things, right? And there's certain formations that really get my attention, and you have that in the wheat. It feels like it could be a potential long-term bottom for the wheat market, just based on the chart, right? I have a hard time trusting it because it's wheat, but if you didn't tell me what market it was, I'd be pretty excited about it. And I think fundamentally you can say, well, we had a winter wheat crop that was rated really very poorly going into dormancy. And then we don't have a whole lot of snow cover, and we keep getting these polar vortexes that are bringing in some very cold temperatures. We're going to do it again next week. And so if winter kill ever really was a thing for wheat, this might be the year for it. I feel like we say that every year, and miraculously wheat is fine. Wheat has 9 lives just like a cat, I guess. But without that snow cover and some very cold, temperatures, maybe there is, and the poor ratings going in, and where the drought monitor is showing dryness, all those things combined, I think do maybe get you a little bit nervous about what this wheat crop might be like. So maybe my pick of the litter is wheat. I think from a fundamental standpoint, corn has been the pick of the litter, but we've really expressed that ever since we put our lows in on August 26th. And corn is exposed to that Russia-Ukrainian news. So, I mean, obviously that was a beneficiary of that on Friday too. But also, corn had 2 days higher going into it. Your funds are really already very long. So I think that's why the corn gains on Friday were a bit more limited than they were in wheat or soybeans. So yeah, like you said, a whole lot going on. I will say on the South American weather front, I think the tide has changed. The patterns seem to have changed. While Argentina is not out of the woods. In fact, you look at their crop conditions declined again this week. And so I think that's why we bounced back off the lows on Thursday. It makes you wonder if we've got permanent damage in Argentina, and if better weather doesn't improve those conditions in the next week, for next week, then you say, oh, there might actually be a bigger problem in Argentina. I'm optimistic that the Argentinian crop conditions are a bit lagging and that we might see that improvement next week. But at least it is cause for concern or renewed concern about Argentina. Brazil seems like they're going to get the harvest done. They're going to get the corn planted mostly within the window of the ideal window. There's only about 6 days left on that, but they are moving along, it seems. So I mean, I'd say there's a little bit less concern about that Brazilian second season corn crop at this point, but there is still a concern, right? So yeah, like you said, there's reasons for weather premium specifically for corn. We still got to get through our planting. We got to get through planting intentions. I mean, we've got a whole lot going on, and there's so many question marks over trade policy and just policy in general, global economy. So yeah, there's a lot more to be talking about, I think, on February 14th, 2025 than there has been in the previous few years. But
I want to throw something at you here, Ted. When you're leaning into the wheat side here a little bit, correct me if I'm wrong, but I know a lot of funds are long at like a lot of commodities, but not wheat. I think they're still short in wheat. And I look at the calendar, we got a lot of first notice days and margin calls coming up and things like that. So, I mean, what's your perspective on that? Could that influence this wheat market to be a continued leader here potentially? What do you think?
Yeah, absolutely. I mean, that all kind of ties together with a good looking chart. That affects how the money managers, make decisions too. I'm actually kind of surprised that they're still short. So yes, absolutely that. And again, it talks or ties into the fundamentals of weather concerns as well. They could easily flip the switch and want to be long wheat, and that could mean for maybe a bigger rally than most of us think are possible in wheat. But again, this is wheat, Jesse. So we do take this with a bit of a grain of salt. But yes, I'd like, from the prices that we're at right now and the market composition that we have right now and the chart setups that we have right now, I think I have the most optimism for wheat, which is a very weird and strange thing to say, I think. But yes, and again, I think the fundamental backdrop for corn is probably been the most friendly, but we've expressed that. I mean, we put our lows in, our quote unquote harvest lows on August 26th, and we've been trending higher ever since. I do wonder if the bulk of the corn rally has maybe run its course at this point, but it could certainly get some help from wheat, so I don't know. Interesting times. The one that we've talked about before, though, soybeans. This is the one that gives me a bit of a problem. I think that Brazilian crop is as advertised, if not maybe a bit better than advertised. I do actually wonder if the late season rains, which caused the harvest delays, may have actually added on to bushels in Mato Grosso. Yeah, I know there were some problems with dryness in the south, and maybe they're going to be a little bit off of what their potential was, but I wouldn't be surprised if we end up having to revise that Brazilian crop higher, even though CONAB did very, very slightly lower it when we saw their estimates Thursday. But the fact of the matter is the global carryover in soybeans it's not ballooning as much as originally expected, but it's still up 25% in 2 years, and there's a lot of beans in the world. And for all the talk of dryness in Argentina, poor crop conditions in Argentina, harvest delays in Brazil. In order for that to really justify higher prices, we had to see a whole lot of global end users get worried about it and come in and show some sort of sense of urgency and buy U.S. beans. But it's really gone the opposite way, Jesse. I mean, our export sales reports, weekly export sales reports for the last 3 weeks have been bad, especially this last one, right? And for all the talk of extending our export window or getting more exports than expected, it's really gone the other way. If anything, it feels like we've kind of ended our window of opportunity sooner than we normally would. And that's just not a good feeling. I guess that could still change. I guess politics could have a play in that. And maybe all of a sudden, you have countries like China, for example, buying for political reasons rather than concerns about South America or anything like that. And if that's the case, okay, we have a different ballgame. But for right now, there's no urgency from the global end user. We've not seen that translate into more sales. I don't really see the soybean balance sheet getting tighter from where it is right now. I'm also not so sure that soybean acres fall as much as what some people are talking about. And I have a hard time really seeing the bullish soybean aspect unless it comes from, again, politics, outside markets as a whole, lended strength from corn and wheat maybe. But soybeans by themselves, just from a fundamental outlook, it's tough for me to really get terribly excited about it at the moment.
What do you make of the broader economy, outside markets, the inflation? We saw a fair amount of inflation data out here this past week that some would say was maybe hot. Obviously the political side kind of playing into everything and all the tariff talk, et cetera, all of that is one piece, I think, as well on the broader economic picture. I mean, what's your assessment of things here, middle of the month of February, as you look at some of those other things that we kind of need to talk about across the board here, Ted?
Yeah, absolutely, Jesse. I think when we pushed back the tariffs on Canada and Mexico, not only was that a reprieve for grain markets, agricultural markets, but also for the economy too. And I'm not so sure that those tariffs don't end up going in place. Trump was just talking very tough on Canada once again yesterday. So, I don't know if we're out of the woods on that one. I worry about the Chinese economy overall. I think that there's this false sense of security about stock market and just economy as a whole, and consumer confidence reflects that. I'm a little more pessimistic about it. Maybe I'm wrong. I hope I am, but the inflation numbers, that's not a bullish thing. I mean, inflation's bullish for commodities, but to me, that says that we're going to have to take a maybe tougher stance on fighting the inflation. That is one of, Trump's big agendas, right? And while he doesn't control the Fed, I mean, the Fed has reasons to be relooking at that, it potentially raising rates again. In my opinion, I would think that might be the right thing to do at this point. So I don't know. I'm a little pessimistic on the economy and what that might mean. And it's not just from a domestic standpoint. Again, I look over at China and I have some very significant concerns for that. That has a big impact on the global market. So I don't know. I don't know if things are as rosy as they seem right now. But again, for the moment anyways, consumers don't really seem to be balking at that. And you can see that reflected in how willing we are to pay for high-priced beef, how willing we are to pay for pork prices that have gone up significantly. Domestic demand doesn't seem to be slowing down really on anything. But, that can change very quickly. Consumer habits are very fickle when it comes to confidence and what we feel about the overall economy.
I wonder, I'll flip this over to the livestock trade, Ted. Cattle, obviously we've seen a lot of connection with the cattle futures and stocks, over the last few years, I would say. Some folks have been getting a little nervous in cattle here as of late. Wondering if you're seeing some red flags. You still got your bull horns on in the cattle market. I mean, what do you think? You look over at the protein side, Ted.
You know, we talked about a fun long position in corn and how they're, you know, they've been, and I think are about as long as they ever have been for this time of year. But you look at cattle and the cattle complex. I mean, the funds were record long as of the last Commitment Traders report. You do feel like they've gotten out of some of that. The bird flu news is scary for speculative longs. We haven't heard anything significant on that in the last few days, so it's allowed cattle to try to base out here and try to hold this very key trend line support. Also, our 50-day moving average. So for the moment, I am optimistic that we can bounce back towards those highs. We still have a bit of a bullish supply side scenario that we've been trading for years now, Jesse. And again, you know, consumers have been buying, but that can change very quickly, right? And whenever you have a really large speculative long position, you have to be nervous that there's quite a bit of downside potential. I'm worried about it. You know, we've been holding the support all week, but we've not had a very significant bounce off of it either. And to me, that, I don't know, I'm walking on eggshells there in the cattle market right now. You know, I think it's a really good time to be doing something to protect the downside, looking at puts, you know, things like that. Yes, they're pricey, but consider the prices that we're at right now. So yeah, you know, cattle market makes me nervous. The activity that we've seen in the last month is somewhat indicative of a mature or aging bull market. Doesn't say it's the end, but to me, it feels a lot closer to the end than it did when we had the organized rally higher that we had basically from September into early January. This sort of market price action has to be a bit of a red flag, I would say, for your if you want to be bullish cattle, that's fine. Like I said, there is that underlying bullish supply scenario. It's still there, still remaining. And as long as demand keeps up, I think there's reason to think that, yes, we could get back up to the highs. But I think there's other things in play here that make you think, yeah, it's also a really good time to be protecting the downside.
Ted, I'll open this to you for final thoughts. Any other key markets you're watching right now that folks need to be aware of, or anything you would throw out to folks in terms of that risk management aspect here as we kind of work our way through some volatility? It just kind of feels like volatility's come back to our markets a little bit here as of late. So I'll throw it to you for final thoughts. What would you add for folks here today?
Yeah, so in like rankings of, you know, where I feel we should be protecting the downside most, I think number one for me is soybeans. You know, but also leaving the upside open, because like we said, you know, anything can happen in this climate of politics and everything else that we've got going on. But I think soybeans and the cattle complex are number one. I'm looking at corn as something that I really do want to have some downside protection on too, because I feel like we have already expressed a lot of bullishness in corn. And with that fun long position being what it is, you have to realize that there is downside risk there that could come from something that has nothing to do with traditional corn fundamentals. And also, if that second season's corn crop does go well, that to me would mean that we could take some weather premium out of this market. So I think there's a lot of things that we need to be doing. I would like to see guys between 25 and 35% hedged in one way, shape, or form on new crop soybeans, 15 to 25% on corn. Again, wheat, I'm really kind of wanting to take a little bit more of a wait and see approach on wheat. I think there's a ton of support below us. I think downside in wheat's fairly limited. So that's not a big one. And then the livestock complex, look, you know, hogs have had a really nice run too. I think there's reason to be looking to protect the downside there too, but I'm not as, I don't feel as much of a sense of urgency for hogs as I do for the cattle complex, mainly because if we do see a downturn in economics or economy and spending habits, well, I think pork might actually be the beneficiary of that, right? So yeah, that's sort of my rankings on how to approach marketing and risk right now. But certainly, I mean, just what am I watching? Really everything, Jesse. There's so much going on right now. I mean, it's headline driven, it's chart driven, it's weather driven. I mean, really everything that you can possibly think of is on the table at the moment. So you really have to keep your head on a swivel. And I think this is the worst possible time to be complacent and just sit there and do nothing.
Be on your toes, be nimble is a good way, I think, to put that as well. Ted, if folks want to reach out to you for a conversation at Zaner Ag Hedge, how can they get in touch?
Yeah, absolutely. We've got strategies we're using to do all the things that we just talked about. So give us a call. We'd love to walk you through those sorts of things and how they can work for you. You can call me directly at 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. You can also sign up for our afternoon commentary. That's me leaving a voicemail message, basically, that you can call in at your leisure and listen to me talk about the grains markets mostly for 5 to 7 minutes or so. And if you're still not tired of Ted, then feel free to follow me on the X platform. I am at the Ted Spread.
Ted Seifert, Zaner Ag Hedge, always a ton of knowledge. Appreciate it when you share it with us here on the show. Thanks for joining me, buddy. Have a good one. We'll talk to you again soon.
Thanks, Jesse. Always my pleasure, man. You have a great weekend. We'll talk to you soon, buddy.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.